everyone. Thank you for really making time to join us on this interview. This interview is a precursor to a conference we're holding on the 31st and 1st of October, which is our 2024 edition of our annual REITs conference. This is a conference we hold every year to bring together various sector players to come and have knowledge share, network, and also we've started a deal room conversation also around how we can get some actual REITs happening. So for this interview, we're glad to have Nareit here, represented by Steve, and EPRA, represented by Dominique. And they will be taking us through a number of trends and areas that we feel quite relevant to how we are growing the REIT market in Kenya. Now, the theme of our conference this year is Navigating New Frontiers, which aims to unlock the potential of the African REITs market. Now, just to set the context, the Kenyan REITs market essentially took effect back in the late 2017 onwards. And over time, we've seen about 4 REITs come to market. And these have helped us both build a learning process as well as encouraged property owners to consider this new innovative way of owning property. Now, the REITs Association of Kenya was formed primarily to bring together sector players to come together in one common forum. And it arose on the back of a lot of policy requirements that our individual REIT organizations were having. So we felt that it was better to have a coalesce around a common body. And this is what we call the REITs Association of Kenya. And today's membership stands at about 50 members. I think we're heading to about 60 in terms of members. And this comprises both the REITs, fund managers, REIT managers, lawyers, and other advisors who came together to help us put together this market. So we're happy that we built an association with the Nareit, and thank you very much, Steve, for hosting us in the last conference. We got a lot of learnings from there, and we've been able to share that with our counterparts in the industry. So today's interview, we want to basically have a conversation around a number of key areas. We want to, first of all, just get a feel of what are the global trends on the REIT market, what are the regulatory and policy insights that you may be willing to share with us. Are there any investment opportunities that you see in Africa, and how do you think this can emerge? What's the role of investor education around this area? How does sustainability fit in around the restructure? What's the risk management approach around this, and how do we manage volatility, partnerships, and cross-border investments? And what's the future of the REIT market globally? So just to kick us off, I want to invite Steve to take us through what are the global trends that you see happening in the REITs market, especially around the US and Europe. And I'll leave that as an open question to Dominique as well, to also just give us your perspective from the European market. So maybe, Steve, you can just tell us, how do you see the trends of the REITs market panning out as we now get along in the current global markets?
Well, thank you very much, Geoffrey. And the first thing I'd like to say is we enjoyed very much your visit in New York and time at REIT Week. And we enjoy our continuing dialogue and conversation with you and your colleagues in Kenya. Nareit has worked through the years with organizations and entities and governments around the world to help propagate what I call the REIT approach to real estate investment. And we're so happy that Kenya has embarked down this road. And I know Dominique and I both look forward to working with you and your team. As far as global REIT trends, we see 4 mega trends around the world. One is specialization, and this has been going on for quite a while, where companies, certainly in the US and increasingly in Europe and Asia, are specializing in a particular property type. Oftentimes we see in many parts of the world as REITs begin to take off, they are very diversified in terms of property type. But what we've seen over time in the US, and certainly over the decades, is specialization. So companies are focused on a type of property, be it retail, residential, industrial, etc. The second mega trend we see around the world is consolidation. And this is an ongoing process and has been for many years, which is companies trying to gain scale in their markets for the ability to obtain different efficiencies in operations and investment. The third mega trend we see over time are new and emerging property types. And we've particularly seen this in the US. I think we're increasingly seeing it in Europe. Dominique can comment. But over the decades, and certainly in the last 10 plus years, we've seen much greater emphasis on property types that represent what I'll call the new economy, the digital economy. And so we're seeing property types in which companies specialize for data centers. We see telecommunications in terms of cell phone towers. And importantly, we see sort of the emergence of industrial for the 21st century economy in terms of distribution facilities and delivery related services along the lines of Amazon and other internet retailers. And the fourth megatrend that has evolved over time, and certainly in the last 10 plus years, is an emphasis on sustainability and corporate responsibility. And so increasingly, companies are looking at their footprint on a more holistic basis in terms of the way it affects the environment, the way it affects their workers, and the way it affects social cohesion and success in their different markets. And I would say these are the four big trends over time we've seen. Dominique?
Yeah, so okay. Yeah, so first of all, Geoffrey and team, so thanks again for, I would say, giving the floor to EPRA also to share, I would say, our views on the market today. And also it's a great privilege. Unfortunately, we couldn't be with you in person, but at least today we have means, I would say, to also participate in cross-border conferences in a different way. Coming back on your question, I think the four, I would say, mega trends, which Steve highlighted, exactly the same in Europe. Clearly, specialization is also something which has become, I would say, more and more popular over the last 15 years. Just to give you an idea, 15 years ago, diversified companies, so I mean a company active in multiple sectors, they represented around 60% of the total market cap in Europe. So today it's around 25 to 30%. So that means that we have far less and less diversified companies and more specialized companies. So that's something, a big trend which we have experienced in Europe as well. The emergence of the new sectors is something we start seeing in Europe. It's clearly a trend, but we are not yet at the level of the US. If I look at the emerging sectors today, they represent 13% in the European market cap, whilst Steve, I speak under your control here, it's over 50% in the US. So we are getting there. And we also recently published a report at EPRA where we do estimate that the new emerging sectors should represent around 26% of the total European market cap in the next 10 years. So this is something we start seeing and growing in importance. We do not have the big data centers REITs in Europe, nor the towers, but that's more for a regulatory purpose, is that the likes of American towers in Europe, they cannot apply for a REIT status so far, but it is something we are addressing on the regulatory side. So it definitely, of course, specialization, the new sectors, consolidation is something which is moving in waves in Europe. So we had a lot of consolidation probably in the years 2020, 2021. There was a little bit of a stop in 22, 23 due to rising interest rates, but this is something which comes back on the market. And we do hope that, of course, some of those companies, when we merge public to public companies, I would say we are not particularly worried. For a membership association such as EPRA, of course, we are losing members, but on the other side, if those companies merge, that means the companies have become larger, a bit larger scale for investors. So those companies are also becoming more investable. So this is also something we encourage, even if we are losing members, but at least those companies are becoming more attractive for investors. Of course, consolidation, public to private, is a reality. So there were some very large private equity firms taking some company private, the likes of Blackstone or Brookfield. We do expect those to be compensated by IPOs. So there are a few things in the pipeline so far, but nothing super substantial. I know there are one or two more substantial IPOs potentially in the pipeline, but it will never be before the second half of 2025 or in the early 2026. So consolidation is clear. And as Steve mentioned, sustainability, yes, of course, a big theme, probably one of the very few areas where Europe is a little bit more advanced compared to the rest of the world. And even in Europe, the listed real estate sector is more advanced and more active in sustainability compared to the private real estate sector. So that's something I would say. Those are the four mega trends, exactly the same as the US, but to a different stage compared to the US. The US
Thank you
is
very much
more
on that.
advanced.
Now, speaking about how the markets have evolved in Europe and the US, in Africa, for instance, Steve, we have started off with the real estate sector. We started off with the residential commercial property sector. How long did it take you to experience this growth in the real estate itself before going into specialized REITs? What was the evolution process?
I think you know, Geoffrey, your attendees may not know, is REITs began in the US in 1960. So we've been in process, a work in process, for now over 60 years. The first few decades were really a developmental stage in the United States from 1960 into the 1980s. And then in the 1980s, we began to see the slow emergence of what I'll call the modern REIT era in the United States, which sort of came together in a meaningful way in the 90s. And we sort of had a big bang moment in the United States in the early 90s, tied to a credit crisis and a recession that occurred in the United States in the aftermath of significant changes in tax law and regulation of banks and whatnot, and overbuilding in the real estate market as well. And that set the stage for the beginnings of what I'll call the modern REIT era, as more and more companies went public in the public capital markets, gained far more scale, and truly began to specialize and over time consolidate in a meaningful way. So I would say it took a generation or generation and a half to sort of get to the modern REIT era in the United States. And it came in part out of tumult and crisis. It came out in part of the hunger for diversification in investment portfolios through real estate investment. And the public saw a good deal and they got themselves involved. And it's worked out quite well over the decades. And so what we've seen in the United States is tremendous growth in the REIT marketplace over recent decades in terms of size and scale and competitive returns over a multi-decade period.
Was that the same process, Dominique, in the European REITs? Did you experience a similar trend?
Yeah, yes, clearly, of course, the REITs landscape is much younger in Europe compared to the US. And the experience has been that I would say two different aspects here compared to the US. So first of all, I would say the REIT regime is something which is not always set in stone. So you may start launching a REIT regime in a particular country and realizing after 2 or 3 years, probably it's not a state-of-the-art REIT regime. Maybe we should make it a little bit more investor-friendly, which might lead you to version 2.0 of your REIT regime. So that's something we have experienced in some European countries. And I think I always use the example of Spain, which introduced its REIT regime back in 2008. Of course, the timing was not great, but it is what it is. Launched its REIT regime. One IPO came to the market. Markets realized that he was not, I would say, investor friendly, and they decided to amend the regime, launch a new regime in 2013. And at that time, in less than 6 months, there were significant IPOs coming to the market, and the total market cap was multiplied by 10 in less than 6 months. So bottom line here, I would say a version 1.0 may not be perfect. So you may have to contemplate, I would say, revamping slightly your regime after a few years. And I would say the big, I would say, contradiction we have in Europe, for example, compared to the US, I like to say that we are not the United States of Europe. In Europe, it's an addition of several countries with their own legislation, their own tax regime, their own legislation in overall terms, etc. which makes, of course, the story a little bit more complicated than the US. Personally, as a European, because I'm Belgian, but I like to consider myself as a European, I'm dreaming of one day launching an EU REIT regime or European REIT regime, which is something which might become reality maybe in 20 or 25 years from now. So that's an important subject matter, and probably the reason, one of the reasons why I would say the market didn't grow at the same speed in Europe compared to the US is that we have, I would say, all those local REIT regimes sitting next to each other with certainly a common trunk. I would say 80 to 85% of the regimes are the same, but are not really the same. And of course, for the investors, sometimes it's complicated to compare the one regime with the other. So yes, so that's probably, I would say, where I would say my view about how Europe has grown over the last.
All right, Steve, what has been the role of regulations in driving the growth of the REITs market in the US? What lessons can the African regulators get from this?
I think that's a great question, Geoffrey. What we've seen in the United States is the importance of a constructive and supportive regulatory regime, both through legislation and through regulation. And in the United States, going back to 1960, we've been blessed with a legislative mission that I think is pretty clear and succinct. And that's really to use REITs as an avenue to make real estate investment available to more and more people. The whole point of REITs at the beginning of the United States was to make large-scale real estate investment available to every person effectively in the society that had an interest in benefiting from real estate. And so the goal has been to be as much as possible widely held, to have professional management in place, and to be focused on the long term. So that's been at its base, together with the fact that in the United States, the land and pretty much any permanent structure put upon the land is available for the REIT format. And that's one of the reasons we've been successful in adapting to the 21st century of economy in the digital and other realms. It's also been important in the United States that the regulatory overlay from a tax perspective meshes well with the overarching tax policies and practices in the United States. And so the REIT rules in the United States are relatively detailed and complex and specific, but they operate in tandem with broader real estate investment tax rules that permit a variety of activities that help in the creation of REITs and help REITs be able to be competitive in the overarching real estate market. As an example, from the beginning, REITs have been able to be formed in part through contribution of properties by others into partnerships controlled by the REIT in which tax is deferred. There's no taxable event at the moment to those who contribute property into the REIT-based partnership. We call it an UPREIT, the REIT-based partnership. And so that deferral of taxes allows the initial REIT to amass investment in a wide range of properties without the contributors being forced to pay tax on an immediate basis. The second and very important aspect of tax law in the United States, which has been in place for over 100 years, is the ability to do like-kind exchange. So as REITs are invested for the long term, they're able, when they decide they want to move ahead with a property and basically reinvest proceeds elsewhere, they're able to effectively trade properties without tax incidence. We call this like-kind exchanges. It's well known as Section 1031 in the U.S. Internal Revenue Code. So the detail and granularity of the REIT rules, which focus on long-term investment, being focused mainly in real estate investment, real estate-based income, the ability to have either external or internal management in the United States, all of this is important. And certainly the requirement to pay out, the bulk, if not all, of taxable income is important. The other feature of tax law that I think is important in the United States that has worked to help grow the REIT market is effectively the ability to deduct depreciation from taxable income before the requirement to pay out. So there is an ability to retain some degree of cash to reinvest in the properties, to maintain the properties, and at the same time still pay effectively all the taxable income out to the shareholders. All of that has been incredibly important.
I really appreciate that. In fact, if you remember when we were there for the conference, we picked the term REIT as a way of building the success of REITs from a policy perspective. Dominique, are there any other additional policy drives or regulatory drives that you think can enhance the growth of REITs in Africa?
No, I would say I can probably echo what Steve mentioned, because a lot of the European REIT regimes try to mirror what's happening in the US. Also, what Steve mentions about the obligation to distribute. Although sometimes what I hear from investors is that, in Europe, on average, I would say REITs are obliged to distribute at least 80 to 90% of distributable income. Sometimes I hear from investors that they'd rather have REITs being obliged to keep more on board so that it could help also to grow the size of their company. So that's something I hear sometimes from investors. But yes, indeed, I would say for the rest, I can probably echo what Steve mentioned. It's probably the same to a different extent, but probably the same principles here across Europe.
Thank you. I think one of the issues which we are grappling with in Kenya, for instance, is the issue of stamp duty and the taxes on our REITs. This seems to be sort of a sticky point between us and government. How have you been able to navigate conversations between government and yourselves to just help ease the process of bringing in those incentive structures? How has the engagement with government and tax authorities in the US and Europe been able to support the growth of REIT markets? I think I'll give it to Steve first.
Thank you, Geoffrey. In the United States, one of the areas in which we work is to make sure that there's reciprocity between the federal government and its tax policy for REITs and the various state governments, and that involves 50 states plus some territories. And so we in the United States do benefit at the state level, the individual states like Texas or California, et cetera, from mutuality or reciprocity with the federal tax scheme. So virtually all the states with an income tax for corporations respect the REIT rules at the federal level and duplicate them at the state level. And so between the federal taxing authorities and the state taxing authorities, there's uniformity. And that is incredibly important to ensure that REITs are available and ready to invest throughout the United States of America and all 50 states, plus other jurisdictions. And I think that is critical. The other piece of this that's important to understand is that, REITs need to be competitive in the real estate markets in which they operate. In the United States, the vast majority of investment real estate is owned by private entities and not public entities like REITs. And those private investors, through partnerships and limited liability corporations and other entities, operate under a variety of local rules, and it's important for REITs to be able to do so as well.
Dominique, how's been the experience with the engagement with regulators in Europe?
This is where the big difference between the United States and Europe lays. As I mentioned earlier, we are not the United States of Europe, right? And especially it has become a bigger and bigger issue for some of our members. We have more and more, I would say, European REITs which are active beyond their own borders. And now, of course, today, I would say in the past, I would say the bulk of the REITs in Europe were, I would say, only investing in their own country. So today, more and more companies go beyond the borders, and therefore they are confronted with, I would say, the multiple jurisdictions where the tax legislation is different, where the regulation is different, etc. So that makes probably the stuff more complicated in Europe than it is in the US, where they have the ability, I would say, to be considered as one unique country. So that's, I would say, the experience we had in Europe, which has also prevented for a portion the growth of the REIT industry in Europe. I don't say they didn't grow at all. That's not what I'm saying here. But the point is more the fact that I would say cross-border investment is slightly more complicated in Europe than it is between the different states in the US.
That's quite helpful for us because even as we sit with our policyholders here, I think the issue around the compensation between amount of tax you want to collect vis-a-vis the growth of the industry is still a very big, there's still a dichotomy around there. And I think it's important that, I like what you said, the reciprocity conversation is something that we need to carry forward and help achieve that. Now, the role of investor education. The REIT market in Kenya, for instance, is just about 5 or 6 years old. We're still grappling with understanding it, especially among our investors. How has the investor education been effective in driving REIT market growth in Europe and the US? And what modality or what approach did it take as you are building the market?
Yes, well, investor education is critically important in our perspective at Nareit. Nareit, since its inception in 1960, has been all about education with respect to REITs and real estate investment. And we really see our role as providing education in 3 spheres. The first sphere, and critically important from the beginning, has been with policymakers. And so from the beginning, Nareit has carried on a dialogue with policymakers in the United States, especially at the federal level, but many cases at our state levels. And that education is to remind and educate policymakers about the role of REITs in the real estate economy and the broader economy, why we have REITs, why they're a healthy part of the real estate market, and how REITs support the economy. We do studies every year on REITs' roles in the economy and how they're a constructive force. And we do this year in, year out with policymakers. The second area of importance in terms of sphere of education are investors with respect to both institutional investors and individual investors. Nareit in 1972 created the first REIT index, domestic US REIT stocks. And that is really the forefather, in a sense, of the index initiatives. We're partners with FTSE today, based in London, and EPRA, Dominique's organization, based in Brussels. So the FTSE, EPRA Nareit Global Real Estate Index, and the FTSE Nareit US Real Estate Index, which is the successor to our 1972 index, have been important tools to provide the window into the opportunity of real estate investment to investors, particularly institutional investors. Nareit, for many decades, has a team of professionals that are in daily conversation with institutional investors in the US and around the world. Often, our team works jointly with EPRA's team, visit not only in the US and Europe, but in Asia and other parts of the world. We have a team going to Australia in the coming weeks as well. So we are out in the marketplace educating institutional investors about REITs on a regular basis. And we do it a variety of ways in the post-COVID world. Prior to COVID, almost all of these dialogues were taking place in person. Now we are conducting a significant percentage virtually, such as this conversation via Zoom. But we also are involved in hundreds and hundreds of in-person meetings during the course of the year, our investor outreach team. But importantly, married to investment outreach is research.
Sure.
So for more than 60 years have been conducting our own research internal to Nareit, as well as sponsoring external research by academics and other organizations focused on investment practices, investment strategies, to show not only the basis for investment in REITs, but to show how REITs compare and contrast with other investments in a diversified investment portfolio. So I think that education of investors is critical. And the third sphere is the public. So we are regularly reaching out to journalists and other investment professionals in journalistic space that write to the public about investing. So we do all three, and they're all important.
Thank you. Dominique, how has education been in Europe?
It's exactly the same here in Europe, and that's also one of the reasons why I would say on the investor side, Nareit and EPRA are regularly joining forces to meet with investors more, I would say, with the objective to give a broader view about the REITs market in different jurisdictions in the world. The education of, I would say, politicians and all the public domain is very important. That's one of the reasons why for us, for example, in Europe, EPRA moved its HQ from Amsterdam to Brussels, where you've got the European Commission, the European Parliament, so we are, even our offices here, are part of the EU bubble to get an easy access, because it's clear, so you can have a lot of funding from investors for your industry. You can convince companies to become public companies, but if your tax regulation, your finance regulation, your sustainability regulation is not fit for purpose for the business, you will never get anywhere. So that's why the education of politicians at national level, at a European level is so crucial for making, I would say, that the sector an investable investment universe for investors wherever they are in the world. So this is quite clear. What we've done at EPRA for many years is that we also have investors active in our governance. So the key word remains in the hands of the REITs. But for example, I have a board of directors and also an advisory board where I would say I have a certain representations of the largest investors also active in decision making for the industry. And of course, in those organs, we bring the various types of investors, be it sovereign funds, insurance companies, the traditional managers, or the pension fund industry. So this is something which has also been quite successful in Europe, is also involving not only, I would say, what I call the sourcing parts of the issuers on the REIT space, but also, I would say, the guys who at the end are the shareholders or the bondholders in the structure. So that's something which has proven, at least in Europe, to be quite successful. And like Steve mentioned, also for the US, I would say is the education via research. Every year we also commission external research papers with always the objective to position the listed real estate asset class in a tactical or strategic asset allocation for investors everywhere in the world. Like I used to do when most of the time when we meet with investors, very often you are dealing with investors who have, I would say, a notion of the listed sector, but are primarily investors in the private real estate space. And this is the area where you have to educate investors to let them understand how complementary the listed real estate sector is with the private or the unlisted real estate sector. Because you can have a look at many research papers over the last 20 to 25 years. It will always demonstrate that the REITs and the listed real estate sector have a certain crucial place and a role to play in any good strategic or tactical asset allocation for any type of investors in the world. So this is also part of the education process.
I would like to, I know we're running out of time, so I'd like to just get some 3 questions done, if that's okay with you. We can have them across. Maybe you could give me, Steve, one of the key concerns we've had in our markets has been the issue of volatility, especially for the listed REITs. This has not only impacted on the ability for the REITs to raise further funding, because when they came to market, the prices have really been eroded over time. How has the markets in the US been able to, especially those REITs that get listed, how have they been able to manage the volatility risk, especially on the pricing side? Because, for instance, in Kenya, we experienced a REIT that traded way, way beyond its NAV, and this discouraged a number of other REITs from coming to market. How have you been able to navigate this?
The concept of volatility is certainly an issue in the public capital markets. REITs are real estate stocks, and therefore, over intermediate to long periods of time, they perform exactly like real estate. In the short time intervals, they are certainly influenced by everything else that stocks in the public stock markets are affected by. which is all the developments in the domestic and global economy, shifting interest rates, shifting policies, shifting political considerations, wars, economic dislocations around the world, all the things that affect the stock markets of the world. And so there's no way around the fact that the public capital markets, in them, we're going to observe volatility, because every day the markets go up or down some amount. And REITs as constituents in the public capital markets are going to be affected on a daily, hourly basis by all of this. There's no escaping it. The reality is, over time, they perform just like you would expect the real estate to perform. The private market, in terms of real estate owned privately, is measured an entirely different way, not real time in the public capital markets. And so comparison of the two is difficult. What we see over time, over periods of years, is that the private real estate and public real estate perform very much the same. The biggest difference, really, at the end of the day, is that public REITs, in the US at least, operate with far less leverage or debt, and therefore take on less risk with respect to that feature, even though they are in the public capital markets. And also importantly, over time, the public REITs, given their structure and performance, incur far lower fees for the investors than most private real estate investments. And so we take pains to explain this to the investment community. And while no one embraces the volatility, although some should embrace the volatility, because in volatility there's opportunity, it is an ongoing conversation we have with investors.
Yeah, volatility can be a great opportunity for short-term investors. Long-term investors can benefit from the REITs because both Nareit and EPRA, and also in other parts of the world, there are a lot of studies which can easily demonstrate that the REITs are very often outperforming the private real estate market. Something which Steve didn't mention here is also the liquidity offered by REITs compared to the private real estate market. So that's an important subject matter for a lot of investors today. Is also the access to the sectors which you are less familiar with. I would say the new emerging sectors, much more complicated to get access to those type of assets on the private real estate market. And clearly, I would say both listed and unlisted can work perfectly hand in hand. But what we've been observing for many, many years is that a lot of investors are sub-allocated to the listed compared to where they should be allocated on the listed, just from an efficient frontier point of view. So if you want to maximize your risk return portfolio, REITs deserve a much bigger space in every type of investor's portfolio. And we know some of those investors. We have a few examples, for example, of the pension fund industry or the sovereign fund industry in Europe, where the allocation between listed and unlisted is 50-50. So those people have understood, I would say, the rationale of having a bigger allocation to the listed real estate sector. And if I look at the market conditions of the last 2 years, I'm very often surprised to see why investors want to continue to pay a premium for something which is totally illiquid, such as the private market. Because the discussion about a premium or discount to NAVs is another subject matters. But I would say today, investors, if they have the opportunity to enter into different segments of the real estate market in stocks of companies which trade at a discount compared to the net asset value, is probably providing more value than investing in the private real estate investments where you have no clue where the valuation will be in the next 12 to 18 months. So that's probably also some food for thought for a lot of investors. And it's also how we play with volatility. It's clear, okay, listed, like Steve mentioned, the REIT is a listed real estate stock. So it's probably in the short term more volatile. But we also have performed several research papers over the last years which have demonstrated a REIT will always mirror the performance of the underlying assets in the medium term. So if you are an investor in real estate, it's always a medium to long-term approach. So REIT clearly, I would say, deserve a much bigger space in the asset allocation for a lot of investors compared to the situation as it is today. So my view on this, bottom line, there is a huge growth potential for REITs in the world.
Thank you very much. Thank you very much. The final question, I think, from our end, before we go into your closing remarks, I mean, the emergence of new technology, we're seeing a lot of transformations happening, disruptions. Right now, we're seeing AI being quite a big talking point in many industries. Do you see these emerging technologies or technology as itself being a key either leverage or a disruption to the REIT market? What's your view about where technology will take us on especially in the REIT market?
We think technology is very promising for REITs and real estate investment more generally. It will have a variety of applications of importance to keep real estate and companies that own them competitive in the real estate investment marketplace, in the broader marketplace. There's a number of aspects to this. One is for residential real estate owners and operators, what we're calling prop tech can help simplify the rental process. That may streamline the application process for tenants, streamline rent collection, property management, maintenance requests. Certainly can enhance security, potentially through biometric and digital related entry into facilities. In the office building space, it's very possible through prop tech to manage resources and reduce costs. Through different building management systems in commercial real estate. Computer-based system to control and monitor could include HVAC equipment, lighting, power, security, create a much more efficient operation of office buildings and other commercial facilities that also enhance sustainability goals as well, using prop tech in terms of energy efficiency. AI is certainly may come to play a role sooner rather than later in fine-tuning automated building controls. In the hotel space, it's very possible with respect to prop tech that we'll see more and more use of robotics and other related activities coming out of property technology. And in the industrial and retail space, increasingly AI as well as other prop tech avenues can help, I think, forecast demand to optimize supply chains and reduce costs, increase efficiencies, and play an important role in analyzing space usage requirements, the patterns that are taking place, future space needs, and optimize across the real estate space collaboration layouts, how best to arrange and organize building space for the tenants. So, you know, we're bullish on prop tech. We think it's going to play an increasingly important role in the REIT and real estate investment space over the coming decade, for sure.
Okay, thanks. Dominique?
Yeah, it's exactly the same here in Europe. And I think the role of tech is even more important today due to the fact that listed and the REIT, listed companies and REITs are becoming more and more operational companies. 20 years ago, a REIT was mainly, I would say, a company collecting rent from its tenants. Today, tenants are expecting totally different services, value-add services from the landlord. So the buildings have, I would say, have to provide with the tenants with more and more facilities, more services, etc. And therefore, tech, from that point of view, is clearly today in Europe one of the top 3 or top 4 items on every CEO's agenda. Also, a lot of companies, I would say, do not really have an R&D department, and therefore, for them being active in the tech space, also investing in some venture capitalists, I would say, trying to detect the best tech technologies for the next 20 to 25 years is clearly a reality today. And all the tech, prop tech, AI, and all the stuff clearly are part, I would say, of every company's DNA today. Not looking at technology today from a real estate point of view would be, in my view, a big mistake.
That's certainly. All right. So thank you very much for those very good insights. As we wind up, in the room, we have all the stakeholders I mentioned. I'd like you to maybe just give us closing remarks. What words of encouragement could you give them? And how do you see us being a big player in the future? So maybe just your closing remarks. Let me start with you, Steve.
Well, thank you so much for the opportunity to be with you and your colleagues today. And I look forward to working with you into the future to help support the REIT marketplace and beyond in Africa over time. It is amazing that from where I sit, REITs began in the US 60 years ago, and today we have REITs in more than 42 countries around the world. All the G7 nations have REITs. A significant majority of OECD nations have REITs. We increasingly have REITs around the world on all continents. And Nareit's prepared to work with those that are moving forward in REIT-based real estate investment everywhere in the world. We look forward to doing so. It's taken 60 plus years in the United States to get where we are today. The last 30 have really been quite remarkable, particularly as we've seen the propagation of REITs around the world. Increasingly, we have cross-border REIT-related investment out of the US, out of Europe, out of Asia. You know, what we see, if you look in the developed world, the vast majority of real estate companies in the stock markets of the world are REITs. And we would expect to see that continue throughout the world in the emerging markets. And importantly, I think REITs are a recipe to help democratize real estate investment in societies as more and more people and more communities benefit from REIT-based real estate investment. The significant addition to savings and investment, the ability to generate income on a real-time basis, capital appreciation over time through real estate. And at the end of the day, investors are focused on growth. And to the extent that the Kenyan economy is growing over time, REIT-based real estate investment in Kenya will be attractive and increasingly attractive to investors around the world. So I encourage you to keep doing what you're doing and push forward. Carry on constructive conversations with your policymakers, with your domestic investors, as well as investors globally. And thanks for the opportunity to talk to you today.
Thank you very much, Steve. Dominique?
Yeah, probably I can only echo again what Steve just mentioned here. I think it's great opportunity also for us at EPRA to be able to share, I would say, the experience we've had in the REITs over the last 30 to 35 years. You know, both Nareit and EPRA, so we are part of a much broader global REIT alliance, where our key objective here is really to make sure that we can help you benefit from, I would say, the experience we had, longer experience in the US compared to Europe. Recently, we also have several countries in Europe which are contemplating the launch of a REIT regime. And I was invited to, I would say, recently one of those countries to meet with the Minister of Finance and the CEO of the stock exchange. And the question I got at the end of those meetings is, okay, what would you recommend for us to do? And I just said, if you believe that you have a market, the only thing I would do is just do it. So that would be, I would say, probably my key message for Kenya. I think the market is there. We've been through, I would say, difficult years with the COVID, all the crises we've had, etc. But there is certainly a perspective for Africa, clear perspectives for Kenya as well. And of course, I would say any other significant REIT association from the world would be there to help you wherever we can be helpful in any type of matters, exchanging best practices, sharing experience, and how we went through, I would say, the difficult times, and how we went through discussing with ministries of finance, etc., to make sure to get the right REIT regime across the line. So just do it.
Oh, thank you. That's a very good.
Amen.
Amen too. That's a very good way to close it. We're going to just do it. I'd like to thank Steve Wechsler, the president of the Nareit, and also Dominique. Your second name is quite a challenge for me. Moerenhout. I hope I got it right.
No worries. Yeah, it's perfect. Excellent.
From EPRA for speaking with us today. We really look forward to you coming to join us sometime in the future, and if possibly just visiting Kenya. It's a great country, and I can assure you the REITs market is getting traction. And your insights have been extremely helpful, and we hope to carry this along. And some of the learnings should be able to help us work closely with our policyholders to take it forward. So we look forward to uprooting our REIT market, Steve, as you said it, in the US, and more collaborations with you.
Wonderful.
So, ladies and gentlemen, thank you very much. We've been speaking to Steve and Dominique, and they've given us great insights.
Okay, thanks for having us, Geoffrey.
Thank you so much. Goodbye.
Yeah. Okay. See you next time. Bye bye.